Hello and welcome to Water Tower Research Fireside Chat. I am Dimitri Silverstein, Senior Chemical and Material Technology Analyst here at Water Tower Research. You can access archived recording of this fireside chat as well as all of WTR's prior events and published research by visiting our website, www.watertowerresearch.com. Today, my guest is Delisle Bloomquist, Chief Executive Officer of Rayonier Advanced Materials, which trades under the ticker RYAM, and is the global leader in high-purity specialty cellulose chemicals and materials. You can learn more about the company by visiting their website at www.ryam.com. Welcome back, Delisle. Thanks for joining us today.
Well, Dimitri, thank you for having us again. Thank you for the time.
Great. Let's start with the big picture. You just came through a challenging first half of the year. How are you framing that first half, and how do you look at the things that happened to the company in the space in the first half of the year?
Well, the first half was indeed challenging, and fortunately, though, it was largely shaped by a series of extraordinary and largely non-recurring headwinds, which had about a $59 million EBITDA impact. And these headwinds included things like the tariff-related disruptions, foreign exchange revaluations due to the weakening dollar, operational challenges at multiple sites, including some strikes, as well as adverse weather events and a one-time environmental charge. Importantly, though, I'd like to make the point that we believe that the worst is now behind us, with Q2 being the trough quarter for the year. Since May, our cellulose specialty orders have been improving, which reinforces the view that the worst is behind us. The key message I would leave with investors is that these headwinds were transitory. They don't alter the core fundamentals of our business or the power of the opportunities that are before us.
Great. Thank you for that good summary. So as you look forward to the rest of 2025, how would you like investors to think about the second half of the year?
Well, Dimitri, as you know, we are in a blackout period, given Q3 is close upon us. We've guided to $105 to $115 million EBITDA and about $35 million in positive cash flow for the second half. As I stated in the Q2 call, we're seeing more normalized order activity in our cellulose specialties business following the pause in April and May. That said, I really don't want to dwell on the quarter-to-quarter execution here, though. I want to keep the focus on the strategic initiatives that are before our company that will drive meaningful growth in 2026 and beyond.
Understood, Delisle. One of the things that is part of your strategic initiatives for the second half of the year and going forward is cost savings as a driver of improving performance. What are the specifics there?
Well, we're investing $24 million of targeted capital in 2025 to unlock $30 million of annual savings starting in 2026. And this capital is focused on three general pillars: automation, where we will lever technology to increase labor productivity; efficiencies, primarily focused on raw material usage by improving yield and capturing waste heat to energy; and finally, reliability, investing in our plants to ensure more consistent uptime. It's important that I note that this is a structural shift, not just a one-off program. We do have a robust pipeline of additional cost projects that extend into 2027 and beyond. So taken together, this gives us confidence that we will sustainably expand margins year over year.
Thank you, Delisle. Another pillar of your growth story, obviously, is biomaterials. It's a big part of your transformation, and you were devoting a lot of capital and effort to growing that business. Can you tell us a little bit more about what's going on there?
Well, Dimitri, as you know, biomaterials is one of our more exciting opportunities in our portfolio. It's taking byproducts of our CS production, wood elements that we historically burned for energy, and transforming those elements into wood or into high-value products. The economics are exceptional in this space because we'll be using the people, assets, and infrastructure we already have in place, since these projects will be located at our existing CS production locations. Some examples, TARDIS bioethanol project, it's already operational and is expected to deliver about $9 million of normalized EBITDA annually. This was brought forward through about $5 million of equity investment on the part of Ryam, and the rest of it capitalized through low cost debt financing, as well as grants and tax incentives that we received from France. We have a number of projects we call Portfolio One within our BioNova affiliate. This includes Jessup Prebiotics and CTO, another CTO project in Tardis, France, and a bioethanol plant in Fernandina. We are currently expecting that these projects will come online in 2027, and they will generate another $39 million of EBITDA on a run rate basis as we exit 2027. We also have a project we call AGE, which will also be located at our Jessup, Georgia facility. We expect that will come online in 2028, and that's backed up by a 30-year fixed price PPA contract with Georgia Power. And we expect that will add an additional $30 million of EBITDA for Ryam. So when you put all this together, by the end of 2027, biomaterials will reach about $48 million of run rate EBITDA. That would be the $9 million that would be generated by the TARDIS bioethanol, and the $39 million of additional EBITDA from the Portfolio One projects. And by the end of 2028, we believe that biomaterials will expand to nearly $80 million of run rate EBITDA when you layer in AGE. So beyond this well-defined pipeline, we've also signed MOUs with Verso Energy to explore eSAF at Jessup and Tardis, and Graham Bio to evaluate a pilot ethanol to jet plant in Jessup, further expanding our long-term opportunity set. Importantly, we already have financing structures in place: BioNova equity partners, green loans, project-level funding vehicles, which allow us to execute these initiatives quickly once the final investment decisions are made. Bottom line, this positions Ryam as a higher margin, faster growing specialty business aligned with the global sustainability trends, with capital in place to make it happen.
Great. Thank you for that very detailed summary. You got a lot of irons in the fire there right now, but as long as it all continues to move along, it looks like you have a really good chance of 40. I mean, you're talking about $80 million in EBITDA by 2028. Ryam today, I think, is doing something less than 300 million, if I remember correctly, this year. So this is quite a significant improvement that you're looking forward to over the next couple of years. Let's switch gears here a little bit and talk about your core cellulose specialties business, which also seems to be in a significantly stronger position than it started the year with. What gives you the confidence in continuing growth there?
Well, to start off and talk about the industry structure a little bit, the cellulose specialty market is highly concentrated with three players, including us. These three players control about 80% of the global dissolving wood pulp capacity. Because of this concentration, and also because of high utilization industry, which is nearly 90% in tightening, we believe that will support a more stable pricing environment going forward. Analysts forecast, because of these two factors, that pricing should increase 4 to 6% on an annual basis, which if it happens, will more than offset our all-in inflation. Ryam is uniquely also positioned to control most of it. Is uniquely positioned because we control most of the excess capacity in the industry. And that means we are also well placed to capture both organic growth and incremental volumes through customer requalification. Conservatively, we see about $30 million of incremental EBITDA by 2028 just from the CS volume growth. What really differentiates us is our technical leadership, our customer relations, and our product purity. Remember, we've been in this business for almost 100 years, and many of the products that are consumed by consumers are products that we help bring to the market. Many of our customers have been with us for decades, and which reinforces the stability and the resilience of this business.
Understood, Delisle. Thank you. Now, one asset you do have is the Temiskaming plant in Canada, which is currently, at least the cellulose part of it, is indefinite idle while you continue to manufacture paperboard and wood pulp in that facility. How do you think about the Temiskaming asset and your other non-core assets, and how do you see that being part of your portfolio or not going forward?
Well, to start off with, Temiskaming is weighing on our results, and so we have identified opportunities to restore its profitability. So we've identified about $35 million of such opportunities. That would include cost reductions and some efficiency gains, some new products, both in paperboard and high-yield pulp. And we're also seeing some market share wins tied to tariffs on European imports into the US. In the near term, that will support a break-even to slightly negative EBITDA for 2026. Longer term, Temiskaming and paperboard and the high-yield pulp businesses are non-core. And as a result, our strategy is to divest of these assets at a reasonable mid-cycle EBITDA multiple. Doing so would sharpen our focus on our core business, which would be our CS and our biomaterials opportunities, which we see where the strongest growth in margins and investor value creation exists.
Understood, Delisle. Thank you. Before we wrap up and get to questions and Q&A portion of this, what is your key message to investors today? What would you like investors to take away from this fireside chat and how to think about the company going forward?
Couple of points I would like to leave with investors. First, 2025 is clearly a trough year, and Q2 was the low point. From here, we see a clear path to expand our normalized core EBITDA run rate to over $300 million by the end of 2027 and approaching $240 million as we exit 2028 with the startup of the AGE project. And that's driven by structural cost reductions that expand margins, high return biomaterial projects that unlock new revenue streams, and CS market leadership, which gives us pricing power and growth visibility. Most important, we already have the capital in place to execute on these projects and opportunities ahead. The opportunity ahead is compelling. The streamlined, higher margin Ryam with the ability to generate significant free cash flow and deliver strong, sustainable shareholder returns.
Thank you, Delisle, for that summary. It does sound like having come through the first half of the year with a little bit of damage to the company and your performance, you seem to be turning the corner here nicely. And if we hit the goals in 2027, 2028, I think multiple will follow margin, and that bodes well for the stock price, in my opinion. Let's get into the Q&A. So one thing that you haven't discussed is the potential, I think it's beginning next year, that you will be able to refinance your debt at a relatively modest call premium. Can you highlight the potential cash flow improvement that could come about as a result of that?
Yeah, that's an important point. Our debt does become callable in May of 2026 at modest premiums, roughly a 2% premium. If we take advantage of that, there's an opportunity that we can lower our interest expense up to $30 to $40 million annually by repricing the secured term debt. If we pair that with the potential proceeds from divesting the non-core assets like paperboard and high-yield pulp, we believe we will take a meaningful step in paying down our leverage. The net result would be a much stronger free cash flow profile, cash that can be recycled into high return biomaterial projects or potentially returned to shareholders. It's a key lever that adds to the upside of as our EBITDA grows.
Thank you, Delisle. Another question. You mentioned analysts are expecting 4 to 6% price increase in the cellulose specialties business. Obviously, without asking you what your internal expectations are, how certain do you feel in your ability to achieve price increases in cellulose specialties and continue to maintain, if not grow, your volumes there?
Oh, we're very confident. As stated earlier, the CS market is tight and highly concentrated, with the 3 players controlling 80% of the worldwide dissolving wood pulp capacity. These are capital-intensive assets, requiring continuous reinvestment to maintain the reliability and the technical edge and customer qualifications. And that's why securing fair value through price is critical. It ensures we generate the cash flows needed to reinvest in our assets, sustain our leadership, and support the broader industry. Put simply, the structure of the market, our competitive position, and our reinvestment discipline all give us confidence that we're going to achieve these price increases.
Very good, Delisle. Thank you for that answer. I think that's all the questions we have here. So in closing, I just want to thank you again for joining us today, Delisle. Obviously, the Rayonier is sailing into calmer seas after a very turbulent first half of the year, and some of the headwinds like tariffs and customer order patterns that have been a detriment to the first half performance may actually be turning, if not neutral, maybe even into tailwinds as you exit the year. So good luck to you on executing all of your internal strategies. It looks like the market may be starting to cooperate, and combined, Rayonier Advanced Materials looks set to deliver pretty strong results in the coming quarters. So I look forward to seeing that. Thank you.
Well, thank you again, Dimitri, for the opportunity to talk to Water Tower and your investors.
Thank you, Delisle. We'll talk to you soon.